Associates is simply defined as the entity over which the investor has significant influence. Significant influence is the power to participate in the financial and operating policy decisions of the investee, but is not control or joint control over those policies. So the existence of significant influence by an entity is usually evidenced in one or more of the following ways: representation on the board of directors or equivalent governing body of the investee, participation of the policy-making process, including participation in this decisions about dividends or other distributions, material transactions between the entity and the investee, interchange of managerial personnel, provision of essential technical information. Measurement of investment in associate. The investment in associated is measured using the equity method. The equity method is based on the economic relationship between the investor and the investee. The investor and the investee are viewed as a single economic unit. So for accounting procedures, equity method, the investment is initially recognized at cost. The carrying amount is increased by the investor shares of the profit of the investee and decreased by the investor's shares of the loss of the investee. The investor shares of the profit or loss of the investee is recognized as investment income. For the accounting procedures or equity method, dividends received from an equity investee reduce the carrying amount of the investment. So for note that the investment must be in ordinary shares. If the investment is preference shares, the equity method is not appropriate regardless of the percentage because the preferences share is an non-voting equity. Actually, class, I think I've discussed this last last meeting or last discussion we have during the investment, which is, if you can remember, class, the example that I have given to you. I think that discussion is on the tangible and intangible assets, also in the investment. So I have already discussed and give examples for that certain topic. So for accounting procedures, equity method, technically, if the investor has significant influence over the investee is said to be an associate. Accordingly, under the equity method, the investment in ordinary shares should be appropriately described as investment in associates. So the investment is associated or associate accounted for using equity method shall be reported as a non-current assets. So excess cost over carrying amount if the investor pays more than the carrying amount of the net assets. Acquired, the difference is commonly known as excess of cost over carrying amount and may be attributed to the following: undervaluation of the investees assets such as building, land, and inventory, goodwill. So impairment loss is investee with cumulative preferences shares. When an associate has an outstanding preferences, investor shall compute its shares of earnings or losses after deducting the preferences dividends, whether or not such dividends are declared. So impairment loss with non-cumulative preferences shares. When an associate has outstanding or non-cumulative preferences shares, the investor shall compute its shares of earnings after deducting the preferences dividends only when declared. So this will happen, class, in a corporation or in a corporated company, which after, di ba, meron yan sila, class, na every quarterly or semi-annually or annually, like they have a meeting with all of the board of directors, yung mga shareholders. So they are equally, and it depends on the percentage they have, they will equally divided it for those dividends na kukunin na nila. Parang kung ikaw yung investor, kukunin mo na yung shares mo kung magkano yung shares mo sa pinagkitaan or for the profit that the company or the organizations equally divided into based on their percentage that you have shared also in that certain company. So discontinuance of equity method is an investor shall continue the use of the equity method from the date that it ceases to have significant influence over an associate. Ito if you wanted to stop or cease na yung shares mo, kukunin mo na yung shares mo, hindi ka na mag-invest sa kanila. So financial asset at fair value through profit and loss, financial assets at fair value through comprehensive income, and marketable investment of cost or at cost or investment in unquoted equity instrument. So measurement after loss of significant influence. On the date the significant influence is lost, the investor shall measure any retained investment in associate at fair value. The fair value of the investment at the date it ceases to be an associate shall be regarded as the fair value on initial recognition as a financial asset. So equity method not applicable. The investor is a wholly owned subsidiary or partially owned subsidiary of another entity, and the other owners who do not object to the investor not applying the equity method. The investor debt and equity instrument are not traded in a public market or over-the-counter market. Equity method not applicable, and the investor did not file or it is not the process of filing financial statement with the SEC for the purpose of issuing any class of instruments in a public market. The ultimate or any intermediate parent of the investor produces consolidated financial statement available for public use that comply with Philippine financial reporting standards. In these circumstances, the investment is accounted for as follows: financial asset at fair value through profit and loss, financial asset at fair value through comprehensive income, non-marketable investment at cost or investment in unquoted equity instrument. Impairment of asset is a fall in the market value of an asset that the recoverable amount is now less than the carrying amount in the statement of financial position. Carrying amount is the amount at which an asset is recognized in the statement of financial position after deducting accumulated depreciation and accumulated impairment loss. For the accounting for impairment, the basic principle underlying impairment of asset is relatively straightforward. An entity shall write down the carrying amount of an asset to the recoverable amount if the carrying amount is not recoverable in full. In this regard, there are three main accounting issues to consider, namely indication of public or possible impairment, measurement of the recoverable amount, recognition of impairment loss. Indication of impairment, an entity shall assess at each reporting date whether there is any indication that an asset may be impaired. If any such indication exists, the entity shall estimate the recoverable amount of the asset. The events and changes in circumstances that leads to an impairment of assets may be classified as an external and internal source of information. External sources, they are observable indications that assets market value has increased significantly during the period. Significant changes with a favorable effect on the entity have been taken place during the period, or it will take place in the near future in the technological market, economic, or legal environment in which the entity operates or in the market on which assets is indicated. While external sources, market interest rates or other market rates of return on investment have decreased during the period, and those decreases are likely to affect the discount rate used in calculating the asset's value in use and increase the assets. So internal sources will be significant change with a favorable effect on the entity have taken place during the period or are expected to take place in the near future in the extent to which or manner in which the asset is used or in expected to be used. Evidence is available from internal reporting that indicates that the economic performance of the asset is or will be better than expected. evidence of obsolescence, of physical damage, and assets. While fair value less cost of disposals are or is the price that would be received to sell an asset or paid to transfer a liability in an order transaction between market participants at the measurement date and cost of disposal are incremental costs directly attributable to the disposal of an asset or cash generating unit excluding finance costs and income tax expenses. For calculation of value in use is the present value or discounted value of the future cash flow expected to be derived from the asset of cash generating unit. The cash flow and pre-tax discount rate is applied in determining present value. So calculation of value in use, calculating a value in use calls for estimates of future cash flows, and there is the possibility that an entity might come up with over optimistic estimate of cash flows, which is we know all cash flow is the production shall be based on reasonable and supportable assumption. The cash flow is the information, kumbaga, yung information that we can see if the cash is still liquid or there is still cash to support the resource, to support resources to support the company's operations or organizations operations on continuing the business. So cash flow projections shall be based on the most recent budget on financial forecasts, usually up to a maximum period of 5 years, unless a longer period can be justified. The discount rate used in estimating future cash flow is the current pre-tax rate. So for the composition of future cash flow, it is the estimate of future cash flow shall include projection of cash inflow from the continuing use of the assets, projection of cash outflows that are necessarily incurred to generate the cash inflow from continuing use of the asset and can be directly attributed or allocated on a reasonable and consistent basis to the asset. Net cash flow, if any, not to be received or paid for disposal of the asset at the end of the useful life. For the composition of future cash flow, estimate of future cash flows do not include cash inflow from assets that generate cash inflows that are largely independent of the cash inflows from the assets under review. For example, financial assets such as receivables. Cash outflows that relates to obligations that have been recognized as liabilities. For example, payables, pensions, or provisions. For the cash generating unit, the cash generating unit is the smallest identifiable group of assets that generates cash flows that are largely independent of the cash inflow from the other assets or group of assets. Goodwill does not generate cash flow independently from other assets or group of assets, and therefore the recoverable amount of the goodwill as an individual assets cannot be determined. So for the determination of impairment, a cash generating unit to which goodwill has been allocated shall be tested for impairment annually. And whenever there is an indication that the unit may be impaired, by comparing the carrying amount of the unit, including the goodwill, with the recoverable amount of the unit. Lastly, the determination of impairment, if the recoverable amount of the unit exceeds the carrying amount of the unit and the goodwill allocated to that unit shall be regarded as not impaired. The carrying amount of the unit exceeds the recoverable amount of the unit, the entity shall recognize the impairment loss. Asset with investment and property, which is yung sinabi ko sa inyo last time na yung intangible asset is hindi nyo siya makikita, hindi nyo siya matatouch. It's an intellectual property which is magagamit. It costs sometimes $1 million. That intangible assets like copyright, patent, franchise. So this will be elaborated for this discussion. So intangible asset as I mentioned already, is an identifiable non-monetary assets without physical substance. The intangible asset must be controlled by the entity as a result of past event and from which future economic benefits are expected. Accordingly, there are three essential criteria in the definition of an intangible asset. These are identifiable, control, and future economic benefits. For identifiable, is separable as is capable of being separated or divided from the entity, hence sold and transfer license, rented, or exchanged either individually or together with a related contract. Identifiable assets or liability, regardless of whether the entity intended to do so, arises from contractual other legal rights, regardless of whether those rights are transferable or separable from the entity or from other rights and obligations. So for the control, an entity control an asset if the entity has the power to obtain the future economic benefits flowing from the underlying resources and to restrict the access of others to those benefits. The capacity of an entity to control the future economic benefits from unintangible assets would be normally stem from legal rights that are enforceable in a court of law. For future economic benefits, the future economic benefits flowing from unintangible assets may be include revenue from the sales of products or services, cost, saving, or other benefits resulting from the use of the assets by the entity. For example, the use of intellectual property in a production process may reduce future production costs rather than increase future revenue. Of course, for your ideas, no need na yung mag-cost ka pa ng other resources like yung katulad ng mga manufacturing companies na mag-outsource ka talaga ng mga machineries, mga equipment. It will cost a big amount, and then it's a process, while also in intellectual property, it's your idea. Sometimes class actually in other countries like America class, the intellectual property, like for example, you have an idea na ganito, so binibili yon class nila. It costs $1 million. That is why this intangible asset, sometimes it's an intellectual property but it costs millions, as I was saying, because syempre yung idea mo bibilhin niya nila para wala ka nang, kumbaga, it's an agreement na wala ka nang hindi mo na sila hahabulin later on. If ever na sabihin mo, aking idea ko yan, ako yung formulate niyan. So they will buy that intellectual property or their. Sometimes this is one of the examples I may share also to you. During your fourth year, I don't know if saan banda yun sa trimestral nyo, if you have already your research. So during the research class, you will have to make a marketing plan or a thesis or sometimes business plan. So sometimes we are getting some information or studies that exist, that kumbaga nangyari na. So we are getting also. So if we are inputting that on the studies that we have, sometimes we declare the references, which is that certain references, we note that also if kumbaga yung reference na yun ba is galing sa kaninong studies. We have to put that also, that references, like for example, this is the study of ganito, yung pangalan Stonebird, like that. So kasi kailangan natin ilagay dahil ideas yan nila. We have to input that because if not, pwede tayong makasuhan yan ng kumbaga pwede balikan tayo niyan na ginamit mo yung pangalan ko. If you can remember still that Senator Tito Soto actually matagal na yun when Senator Defensor is still alive. na parang inaccuse niya si Senator Soto na nagamit na hindi linagyan yung references na itong quote na to is galing sa ganitong tao na to. So, which is the Senator Defensor is kumbaga particular sa ganong paraan dahil syempre she's an educator, she is also came from international school, so she knows na pwede siyang balikan with that certain quote na you have to like for example ako yung nagsabi ng ganon, ako yung nag-formulate ng ideas na dapat i-mention mo talaga yan, class. At components of the cost of an internally generated intangible assets. These are selling, administrative, and other general overhead expenditure, unless the expenditure can be directly attributed to the preparing the assets for use. Identified inefficiencies and initial operating losses incurred before the assets achieves planned performance. Expenditure on training staff to operate the assets. So recognition as an expense is an expenditure on an intangible item does not meet the recognition criteria for an intangible asset shall be expenses when incurred. Example of the expenditure that is recognized as an expense when it is incurred includes expenditure on startup activities or startup costs unless this expenditure is included in the cost of an item of property, plant, and equipment. Expenditure on training activities or expenditure on advertising and promotional activities, including mail or order catalog, or expenditure on relocating or reorganizing part of all of an entity. So subsequent expenditure, the subsequent expenditure may be capitalized or added to the cost of the intangible assets. An intangible asset shall be recognized if and only if it is probable that the expected future economic benefits that are attributable to the assets will flow to the entity. The subsequent expenditure can be measured directly or reliably. For this class, actually, examples of identifiable intangible assets are brand names, mastheads and publishing titles, computer software, licenses and franchises, copyrights, patents, and other industrial properties, rights, service, and operating rights, recipes, formulae, models, designs, and prototypes, and intangible assets under development. So this class, as I mentioned already in advance with you, the brand names can see, di ba, kung minsan may mga imitations tayo, so hindi din yan pwede, class. When we have the intangible assets, like for example, we can see the Nike or the Adidas or other brand names that we have already applied that class. So it is very important na di ba kung minsan yung mga pirated, yung mga sabi nila class A to, but then at the same time it's branded, ginagamit nila yung brand name which is not applicable, it's acceptable. Kasi pag nahuli yan sila, class, pwede din sila yung kuna ng lisensya for their business because brand names, ang mahal, di ba, kung pag sinabi mong Nike, mahal talaga, class, it costs thousands. Or for the original, it costs sometimes 100,000s, like the Louis Vuitton na bag, yung mga Hermes, ano pa yung mga brand names na dapat. Kasi they have that certain quality of product and that certain brand name na kumbaga it's already there, nandiyan na yun. So we have to respect also, and we don't have to kumbaga hindi natin pwede, class, na anong tawag doon, i-imply or as I was saying a while ago, na yung copyrights na yon is sa mga libro na kinukuha natin, which is also used for during the, like for example, references that we were having on our studies. So also the recipes, formulas, models, designs, and prototypes, we cannot make use of that class. Kasi, kumbaga, pag nagluluto ka class, sa'yo yun eh. Ikaw yung nag-formulate, ikaw yung nag-design ng ganong paraan, ikaw yung kumbaga, iba yung luto mo ng ganito. You have a uniqueness of that certain expertise. So, you have to protect it also, class. So, like if you can see that the chef has high paid also, especially in international, kung nandun sila sa labas nagtatrabaho, kasi that is also their recipes, class. They are also, kumbaga, nagko-combine din yan sila na that recipe is their idea also to innovate or to formulate that certain kumbaga, quality of their product na masarap or maiba sa lahat. So yun. So for intangible assets under development, so measurement of after recognition, cost model after the initial recognition, an intangible asset shall be carried at its cost less or any accumulated amortization and any accumulated impairment losses. Revaluation model after initial recognition, an intangible asset shall be carried at a revalued amount, being its fair value at the date of the revaluation, less any subsequent accumulated amortization and any subsequent accumulated impairment losses. The revaluation model does not allow the revaluation of intangible assets that have not previously been recognized as assets. The initial recognition of intangible assets at cost other than cost. Amortization of intangible assets. The intangible assets with limited or finite life are amortized over their useful life. So the intangible assets with indefinite life are not amortized, but are tested for impairment at least annually and whenever there is an indication that the intangible asset may be impaired. So any factors are considered in determining the useful life of the intangible assets, including the expected usage of the assets by the entity and whether the assets could be managed efficiently by another management team. Typical product life cycles for the assets and the public information on estimates of useful lives of similar assets that are used in a similar way, technical or technological, commercial, or other types of obsolescence. The stability of the industry in which the asset operates and in changes in the market demand for the products or services output from the assets. Expected actions by competitors or potential competitors. The level of maintenance expenditure required to obtain the expected future economic benefits from the assets and the entity's ability and intention to reach such as a level. While any factors are considered in determining the useful life of an intangible asset, including the period of control over the assets and legal or similar limits on the use of the assets, such as the expiry dates or of related leases, whether the useful life of the asset is dependent on the useful life of another or other assets of the entity. Residual value of an intangible assets with a finite useful life shall be assumed to be zero unless there is a commitment by a third party to purchase the asset at the end of its useful life. There is an active market for the asset and residual value can be determined by reference to that market, and it is probable that such a market will exist at the time of the asset's useful life. The recognition of an intangible assets or an intangible asset shall be recognized or eliminated from the statement of financial position on disposal when no future economic benefits are expected from its use or disposal. The gain or loss arising from the recognition of an intangible asset shall be determined as the difference between the net disposal proceeds, or if any, and the carrying amount of the assets. Sorry. Research space. So no intangible assets arising from the research shall be recognized. Expenditure on the research shall be recognized as an expense when it is incurred. In the research phase of an internal project, an entity cannot demonstrate that an intangible asset exists that will generate probable future economic benefits. Example of research activities are activities aimed at obtaining new knowledge, The search for evaluation and final selection of application of research findings or other knowledge, and the search for alternatives for material devices, products, processes, system or services, and formulation, design, evaluation, and final selection of possible alternatives for new or improved materials, devices, products, and processes, systems, or services. An entity can, in some instances, identify an intangible assets and demonstrate that the assets will generate probable future economic benefits. This is because the development phase of a project further advanced than the research phase. Example of development activities are the designs, construction, and testing of pre-production or pre-use prototypes and models, the design of tools, jigs, woods, molds, and dies, involving new technology, the design, construction, and operation of a pilot plant that is not of a scale economically feasible for commercial production, and the design, construction, and testing of a chosen alternative for new or improved materials, devices, products, processes, system, or services. Criteria for recognition: the technical feasibility of completing the intangible assets so that it will be able for use or sales. Its intention to complete the intangible assets and use or sales it, and its ability to use or sell the intangible asset. Criteria for recognition: how the intangible asset will generate probable future economic benefits, the availability of adequate technical, financial, and other resources to complete the development and to use or sell the intangible asset. Its ability to measure reliably the expenditure attributable to the intangible asset during its development. Well, investment property is defined as a property held by an owner or by the lessee under the finance lease, as we mentioned in a prior discussion, to earn rentals for capital appreciation or both. In other words, only land and building can qualify as investment property, and equipment or any movable property cannot qualify as investment property. Examples of investment property: land held for long-term capital appreciation rather than for short-term sale in the ordinary course of operation; land held for a currently undetermined future use; a building owned by the entity and leased out under one or more operating leases on a commercial base; a building that is vacant but is held for to be leased. Recognition of investment property: it is probable that the future economic benefits or services potential that are associated with the investment property will flow to the entity. The cost of fair value of the investment property can be measured reliably. Costs of excluded from cost of investment property: startup costs unless they are necessary to bring the property to the condition necessary for it to be capable of operating in the manner intended by management. Operating losses incurred before the investment property achieves the planned level of occupancy; abnormal amounts of wasted material, labor, or other sources incurred in the constructing or developing the property. Subsequent measurement of investment property: fair value model. After the initial recognition, an entity that chooses the fair value model shall measure all of its investment property at fair value. Any changes in fair value are included in profit or loss. The recognition of investment property and the investment property shall be recognized, eliminated from statement of financial position. On disposal, when the investment property is permanently withdrawn from use, no future economic benefits or services potential are expected from its disposal. So disclosure related to investment property, whether it applies their value or the cost model of measuring investment property, the amount of rental income for the period, along the related expenses, restrictions on the investment property, either through rentals or sales proceeds, contractual obligation to purchase or construct investment. So that ends our discussion this meeting.